Good morning, everybody. This is Max Farrow. This is DexFXMarkets.com. This is the trader webinar. We do these webinars Tuesday, Wednesday, and Thursdays at 11 p.m. or 11 a.m. Eastern Time to help guide you along your path. This next hour is going to be spent talking to you about your trading. It could be anything that happens in this hour. We could talk about just about anything within the world of trading and what's out there. But today we're going to talk a little bit about the mentality of trading and working with demo and working with a system and a strategy. We've talked about many times before working with different strategies and what to use or what not to use. The concept of using strategies to trade is usually surrounded with ambiguity and too many things that are happening, right? So somebody usually starts out with a nice little recipe of a stone soup, right? And they always say, well, my stone soup theory has a process where you just put the stone in the pot. That's all you need. You just need to put the stone in the pot. So you grab yourself a pot and you put the stone in it. And then the next thing that's not really working. It's just sitting there. You're still hungry. And what do? They say, well, okay, yeah, well, if you had some water in a thing, and then you pour some water in. And if you had some flame underneath the pot, and if you added some carrots and some potatoes and some peas and maybe some couple chunks of ham in there, now you got all this stuff that originally the simplicity of just a stone soup, which sounded so appeasing to you, is now riddled with a lot of other things. The idea of any strategy that uses one system in the beginning and then adds many, many, many others to validate it along the way. Usually is a strategy that's used to trick you or just keep you moving into the next level. At Dex FX and Dex Signals and Dex Trader and Dex Indicators are the Dex family of tools. We've used one process. And even though that we have many, many different programs, okay, we have the TNT strategy, we have daily signals, we got intradays, we got 5-minute trades, we have a step bot system that trades Forex, we have a couple of other Forex systems that have strategies, but these are separate strategies within the system. But under the Nadex heading, we basically use one way of doing the trades. And what it really is that if you think about the market as this square, and you all know what the market looks like. It looks like a little heartbeat, right? And let's just pretend that this is the heartbeat, right? And usually, if you really zoomed in, these would be candlesticks. But we're just going to use this bar graph as this line graph as a representation of the highs and lows of the market. The vertical lines here, the poorly drawn vertical lines, are what we consider time, right? So if we look at this process in very simplistic format, is that this is the time, right? So every line on the chart, depending on what time frame you're using, whether it's a 1 minute or a 15 minute, every line would then be considered 15 minutes, or every bar, okay, that you would have, or candlestick, would be considered 15 minutes, right? And so then if this is 15 minute, then each one of these lines could be considered 1 day, right? At that line, or, an hour or two, whatever, right? But this prospect is still the same, is that as time goes on, the horizontal lines are then considered price. Okay. I was speaking to a trader this morning in chat who got out of a trade a little premature, but I asked them, when learning how to scalp or do things, and we'll talk about scalping here in a second, I said, what triggered you to get out of the trade? And he says, well, there was a red bar after one of them, and it was very close to expiry, and it triggered me. Red can trigger, and he's absolutely right. So the market can be influenced, or the marketeurs or the traders can be influenced by the market itself. So just in the simplistic terms of a 1 bar turning red can trigger you into getting in and out of the market. So the two things that influence the market, or that run the market, is simple: time and price. And everybody here agree with that statement? Is it simplistic enough to see that this is an agreeable statement by every person here who wants to be a trader? and even some of my seniors who are here. I'm not talking specifically about Paul or Thor being senior, but no, they are. Do you guys agree with that statement as well?
Oh yeah, absolutely.
So
Yep, absolutely.
if this is the market, how do we use this time and price to our advantage? Well, we have to begin to look at if the horizontal lines are price at zones where price sort of hovers at. And we call this support and resistance, okay? And the resistance here and the support areas will gather in chunks, excuse me, of information. So as the market persists to go in a particular direction of one way or another, excuse me, let me back up a little bit. We refer to this as trend, right? And so when we can spot a trend, the idea of that is to do what? Get onto that trend as well. And so we look for markers. So when the market moves, it can either be trending or consolidating. Right? In trending, we look for higher highs and lower highs, or I'm sorry, I mean higher lows, to consider this to be an uptrend. And the same is true when you're looking for a downtrend. Your highs get lower and your lows get lower. Consider it a downtrend. In consolidation, it usually has one area that it's sort of picking to be stuck at, right? Usually sometimes it has a little bit of a high or a low area, but the zone itself sort of remains the same until it does what? It has to break out. I want you to keep in mind that statement of breaking out of an area. The one thing that we use within all of our systems, again, considering that time and price, market movement, is that we grab a particular amount of time during that market. And we look at the observation, we observe a particular movement of the market. We then look at the highs and lows of that market during that observational time. We then say, if this market, during the observation time, we set the highs and lows, then we look at the signal time. If the market, let me see if I can do an eraser here. Oh, okay, eraser, hold on. If the market happens to go past one of those lines, remember, we look into the future here, and it goes past one of those lines, we call this a breakout and a continuation of the trend. Okay. If it were to happen to go the other way and go down, so if it breaks the top area, we call this a buy. And if it breaks the lower end, we call this a sell. When this happens, let me zoom in just a little bit more. Once it pierces this level, we use this lower level as a guide to say, this is the absolute area during that time that the market shouldn't go down. And so our success rate of this is at 96.1%. And we know that if the market does happen to pull back, if it's continuing on with a trend, it shouldn't really fall down too far into the world of craziness. But if we put a working order with Nadex, then it can continue on. And this is where we hope to vibrate at to get our money. Now, these usually only fill about 30% of the times on dailies. But when they do, they have a 96.1% success. There'll be also times when the price will come down even further and get closer to that line. And we call this an at the money. And this at the money system is very lucrative as well. And I'll show you here that in a second as well. And it will go on. Now, of course, if it goes past the line, we call this an OTM, out of the money. And these have a lower rate of success, a bigger rate of financial gain. And that's what you have to kind of look at here is how many times is this successful? In the concept of the daily signals, this process of using this time period to see, waiting for the breakout, to grab direction is very important because we're looking at chunks of time itself. About an hour and a half later, guess what happens? It does it again. It looks for the particular times of highs and lows, waits for a piercing or a breakout of that area of that high and low, and then deciphers if that's a movement. Now, what happens if it goes into consolidation and doesn't move past that time? If it just happens to stay in this area, what happens then? There's no signal. That's why you don't get 10 signals every on the dailies. You don't get 10 signals every time there's a signal period. Why am I telling you this? Well, the comfort, excuse me for 1 second. I had to get that tickle out of there. The comfort of knowing what the basic fundamental of our signals are and our system is that you can start to rely on that basic, because even sitting here at the daily signals, do you need to use a chart? No. At the basic core of your strategy, you have to look, can you trade with that strategy at the core, right? Because right now, the signals tell you that this breakout's here. There's only one or two things that you really need to do at this point, right? One, check news. Two, check the success rate. It's over 97% on the pair. Now, by the way, that 96.1 is overall, even with the good bad pairs. Okay. So, but I look for pairs that are over 97% on the spreadsheet. And you've seen the spreadsheet for dailies, of course. 3 from that point, I trade my favorite pair. So if I have like 2 or 3 pairs, I may not put working orders on every single one. When I trade the dailies, don't even look at the market. I don't look at the charts. I don't do any of that part. I'm not doing choke ups. Paul's the choke up artist. You know, there's a lot of this thought that if you're going to work the market, work it. You could break this down even further, but the core system is still there for him. He's not making up a whole new system. He's following the same.
I follow the core all the way.
Yeah.
And then I decide.
And then he can adjust small movements, right? When you fly a plane, you don't jerk the wheel around. You make small corrections. And that's the thing. This is where most people kind of get a little bit disvalued that, oh, it's not super complicated. How can you trade something so simple? We call it the 4-pillar method. In trading the concept of 4 pillars, you can remove a couple of them and still have a good foundation, still have a standing foundation. It's the same thing my brother and I developed when we were doing search engine optimization, that we stayed with the core beliefs of search engine optimization. And even though that Google would come out with this massive wipe and it would wipe everybody's little tricks and trades and all the little gimmicks that, could get you on the first page of Google, we stayed with the 4 pillars, always keeping the same thing over and over again. That's why our sites have so much success with search engine optimization. It's the same thing that I've created with this algorithm that works for the daily signals. And believe it or not, the daily signals, the intradays, the SR maxes, the daily extreme spreads, they all use this core method to decipher its direction and its level. Now, in some cases, the level might be smaller, like with the intradays, and the time periods might be shorter, but it's still the same core method. I want you to keep that with yourself. That the moment you start adding other things to that core, you have to ask yourself, have you followed first? Have you proven or disproven the core works for you? Because remember, the core doesn't work for everybody. And why is that? Why doesn't it work for everybody? Well, because either John or Steve or Frank or Sam or Sally or whoever decides that they want to add their flair to it. Everybody wants to try to add their system to it. I was speaking to one of our traders. He came on board. His name is Victor. We'll just call him Victor. There is really this guy, and I'm not just, it's not just an anecdote or something silly that I'm trying to put in front of you to give you an example. This person really does exist. And Victor came on board and he stated, Max, I've been looking for somebody that I could just listen to and follow what they say. Could you just make it sweet and simple for me so I can follow a few things and do it? And I said, absolutely. Here's what you'll do. And I gave him the flow that we use for dailies, 3, 4 or 5 things to do. I gave him a process that on Sunday night, he'll look at the market and he'll set his calendar for the week by looking at the news. He'll take one of those flows out of the way already by setting his time. So when he looks at the news, he sees 2 or 3 bulls he doesn't trade during that time period. So on Tuesday or on Monday, he might trade at 9 a.m. for the 11 a.m. expiries or 8 a.m. for the 11 a.m. expiries. But on Tuesday, he may not be able to and trade at 12 o'clock for the 3 p.m. expiries. And he sets his pattern out for the week. Once he does, he comes back, and when their signal does arrive, he trades anything that's over 97% that has the markers that he's looking for. And what he's looking for is that the euro or a particular pair or Great Britain pound, I don't know exactly which one, I can't remember which one it was, but he only has a handful of them, 1 or 2 that he trades. I don't think he trades the Audi USD because it's commodity pair. I think he trades and stays with a certain amount of pairs that he trades with that are over this level. He puts a working order at the level and he walks away. That's it. What is the success rate? Well, for the past 3 months, he's been plus positive in his profit margins for those 3 months. And he's already on to the races with it again for a 4th month. He started in January. And he doesn't trade 50, 60 trades a day. And he's trading only 1 contract at a time. He's made it very simplistic for him. Again, a woman, her name's Sarah. And Sarah is 72 years old. And she only trades between 4 to 10 times a month. She doesn't have it as laid out as Victor does. She just trades when she gets the gumption. Her words, not mine. And when she does, she goes in, she puts a couple of working orders on. She doesn't use the 97% side of it. She goes with the pairs she likes, though. So she uses this method within this core of flow. And she says, I will go in and trade this particular time. Now, how much money does Sarah make? Well, the last time I checked on her back in March, she was pulling anywhere between $200 to $300 a month. You may not think that this is a lot of money, but to her, it's the world. Why? Well, Sarah has been with us for a pretty long time, and she pays $97 a month, and she's an all-in member. There was a deal that was running for this. So is she in profit? And remember, she only trades 1 contract at a time, by the way. When I asked her, why do you just go for just, you could trade more and all that? And she threw at me the Chinese proverb of the fisherman on the wharf who's sitting there at noon, enjoying his day, who just caught a half a boat of fish, sold it so he could sit there for another day. And when asked, why don't you go out and fish the entire day? He goes, because I had to get a bigger boat. And it's the same thing for her. She's in disability. She doesn't really do much. She enjoys her grandkids. When an alert comes over for her that she sees that she wants to take, she takes. Only does trades 4 or 10 times. And then we got Ben. Ben is an individual that is a little neurotic when it comes to trading. He's in there every day. He'll trade 3 or 4 sessions. He's putting 6 to 10K in his pocket. But he's very guarded. I won't even tell you the true amounts that he can make that he made back in January. He's made me swear, and I don't like that. He does better than me when he trades. But he's neurotic. He looks at and I won't say like that's a bad thing. He's very analytical. He could probably tell you a lot of the success, but he's very guarded. He's like, this is too good to be true. This has been happening now for 6 months, and I'm just going to keep this to myself. Okay, no problem. I said, are you using something else? Are you using, because I'm always on the hunt that if somebody found another pattern in there to use, let me know. No, Max, I use your charts. I use your spreadsheet because I mostly use your spreadsheet. But I use charts to sort of validate with support and resistance. He's not using anything crazier than what we already have in there. I used to joke that you could trade the market by using the clock on the wall. That at 3 o'clock, at 3 p.m., you would go to the internet and you would place a buy trade every single day at 3 o'clock. Not 3:01, not 3:02, not 3:04, but 3 o'clock. Whether news was going or not, and this is the simplest flow and mentality that you can do, is to choose yourself a direction. And you would have a success rate. I've always wanted to trade this. I've always thought that how cute would it be if I did that? It has a success rate. But even doing this has a flow that you have to follow. Because remember, getting into a trade's one thing. Getting into the trade correctly is another. Buying the right price. I get there at 3 o'clock and there's only $30 availability of profit. I get into the trade. If there is $28.50, do I get into the trade? You have to set your standards here at this point. Keeping in mind, the higher the number, if it's got $40, has the most possibility for it to lose. Remember, especially in Nadex, in that process. Okay. So keeping your theory and your systems very tight and very simple is very important. The other concept here is that money management along the way is very important. Incremental crawl is very important. Those things we could talk about at a later time. But now I want to talk about a young gentleman that was in the market this morning and doing a trade. And I think he's here now. Let me see if he's in the chat room. Yep, I think it's Jason. Jason, was that you that was doing the trade? You can go and chat. If you're able to talk, I can bring you out and you can talk if you'd like, if you have a microphone or you're called in or what have you. But when watching Jason's trade this morning, and I hope you don't mind, listen, before I go, let me preset this. I've watched Jason trade a handful of times, and I don't have a large amount of information about the young man. But I know that by watching him, he had an idea of what he thought it was, and then it looks like he's snapped into what it is. Okay, so this is at a level now that he's in the early stages of figuring this stuff out. So I'm showing you because as an example, not because I think he did anything super wrong, but I think the world of the market has triggered his mentality just a little. Okay, so we're going to look at this real quick. Now, excuse me. Let's see. Yes, you are right. Okay, good. The process of doing the TNT, okay, we all know what the TNT is. It stands for trend, negation, trade, right? What we look for is a positive trend happening in an area. And as you get arrows that come into the process, these arrows are depicted as either up or down. And if you're looking at an uptrend, once you decide that, hey, this is a trend, right? We've established that it is a trend here, right? By these higher highs. And once that trend is depicted, you wait for an arrow to go against. And then the very first arrow after this negation is your trade signal, right? And that's the concept. And it's very, very simple, right? But guess what? It's the same pattern as the daily signal. The markers are just a little bit different. The concept here too is that when this trade happens, you go from sort of at the money. You can pick other areas of structure, but ultimately enough, it's still the same. Several bars later, we're hoping for the win. Now, it depends on what time frame you're on, a 5-minute chart or a 15-minute chart. This is a 1-hour trade, And this is a 2-hour trade. You're looking for trades that are about 2 hours long. If you're trading on Nadex, you want expiries that are between 45 minutes to an hour. And if you're on a 15-minute trade or time frame, you're looking between 1.5 to 2 hours out. Okay. Gives your system enough time. So I want to show you the trade itself. We're going to do a new share. It's the USD CHF. Now, the concept was real simple. He was able to pick trend, right? We got some trend. We got a little bit of breakdown of trend here, just a little bit from this position here. So this is probably not something that I would have necessarily got into with this breakage here. But the reestablishment of the trend broke through the support and resistance areas and the trend value and could actually be more considered a breakout trade than a TNT trade. So the TNT of that trend negation trade has a variation called the breakout. And that's what this is. And if it was traded that way, brilliant. It's done in a very easy way. With a breakout trade, you wait for that first arrow or the breaking out of this system. And you get in at that level. He got in at 10.0057 on Nadex for an expiry for 11 a.m. As it began to go on, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and it just kept on going on. The trade was done at a particular time that he'd seen this process happen. And if you got in on this arrow, you probably got in a little premature. Or if you got in over, because it looks like you got in right around this area right here, there was no arrow there, right? So this is the arrow that you probably looked at and said, okay, I think that's going to do. But in all honesty, this was done in error. So using the arrow here at the 6 o'clock time period would have been something that you would have had expiry for, even being on a 15-minute chart. You know, having an expiry 5 hours later would have blown this signal out. I hope that makes sense. So just as a marker looking at the trade, you really didn't follow the concepts of TNT. You may have followed a breakout system here, but one that happened hours before, because this is where you basically got in at it about 9 o'clock. So the concept here is not to look at the arrows as gospel, but to look at them as an opportunity at timing. Even though that you're getting in here, this arrow depicted, yeah, it should win. No, it would have won here. This would have been the spot that we would have really been at that, oh, actually we got in right here at 57 that you would have won at, which would have been up here. Would have squeaked, and I probably wouldn't have gotten into this trade for an expiry at 7 o'clock with this arrow. I would have looked for something that would have been at least an hour and a half, 2 hours away. So it didn't have the time. Jason, does that make sense? And again, I'm not trying to beat you down by telling you did all these things wrong, but I am showing you what you've done wrong within the depiction of the system. Remember, the arrows are great, but they're only a tool. They're only one part of the process. This is not about, again, being the arrows, being gospel. Oh, I should have won this trade because it was a down. You put an arrow on here because it's a down. It should have won. No, that's not what this is about. It's looking for the pattern with the arrows in mind. Now, once support was broken, or the trend was broken here at this level, we could then start looking for realization that it's in consolidation. And you're looking for a top area. Now, excuse me, there was a concept here that he did mention. As it started getting closer to expiry, right around in here at 11 o'clock, this bar, this bar right here, because he got in right around 9:30ish, right in this area. Everything was going great. It was probably doing really well. It started to test it. And then this bar happened, this red bar, and he got out because he got triggered by this bar saying he was getting out. Even though that it was just sort of a Hail Mary, it was an accidental play, his mentality was triggered to get out. And it was probably good because if you would have won, I think you would have established a bad habit, you know, by getting it to in earlier using arrows preface too. Jason, you have to wait for the most perfect trade to come up because trading 4 to 10 times a month using this system can yield you pretty good numbers. I mean, yeah, you can go neurotic like Ben does, or you can be like Sarah and do 4 to 10. You'd be like Victor and do 10 to 20 trades a month. And him making between $800 to $1,000, he's only trading one contract at a time. How does he turn this into $8,000 or $10,000? By simply adding consistency. I'm sorry. Once he finds the consistency, simply adding volume. God, I am so tired. It's not even funny. Okay. Also, Paul is a master scalper, and I think so is Thor. Thor can kind of see where his levels go and where he does the process with his spreads. But you have to understand, too, that scalping should never be about the number that's on Nadex as far as the market price. Does that all make sense? You should never look at the market price on Nadex as an indicator, oh, I'm in, my profit loss says that I'm minus $25, I got to get out, or $75, I got to get out now. The moment you get into a trade with Nadex, you're in the negative. Now, if the market does start doing very well, you might get into the positive. But when another time or another during that trade, you're going to get tested and it's going to drop. If you set that value by that market price, all you're doing is telling the market makers that you're manipulatable, that you can get in and out by market price. Even though that the pair is still winning, it's still winning, it shows a negative in the market price. Why is that? Well, because that market price is not set by Nadex. It's set by the market makers themselves, the people you're trading against. Remember, Nadex is an exchange. And it's an exchange that it deals with you versus another trader. Now, that other trader may be somebody who's just like you or a market maker. This is a big company that uses proper software to and a lot of analytics to be able to set its deals. That's why they call them market makers. And if they remove a bunch of contracts out of there that are made available, it'll drop the price almost down to zero for availability. Take it to its final level. Now, you can't lose more than if you got in for 25 and they got in for 75, you know, you can't lose more than your 25 or your 75 bucks for the risk because you set that unless you trade more than one contract. But they're hoping that they can trick you sometimes by manipulating that market price and get a lot of people out. I want you to keep that in mind when you're trading on Nadex. All right. At this time, does anybody have any questions about the market, about this trading process of trading the TNT or the dailies or anything else? Does anybody have any questions? Please come out now, and we'll go into the next segment, and then I'm probably going to end it for today because we have some things to go work out on.
Max?
Yes.
This is Chris. Just a quick comment about Stone Soup.
Yeah.
It's actually a book.
Yeah, I know.
But I just wanted to for other folks who may not have known that, it's a good book, especially on leadership and how to work well with others. Just a little note there for folks. That's all.
Well, it was originally, I think it was a proverb or a story, a fable of some sort. I can't remember exactly, but I know that it was. This was great. Please put it up somewhere. Yes, I will. We will be doing this. This video will go out and go onto YouTube today. The concept of learning how to trade in this mentality of following a system is very difficult if you don't use the following things. You have to use patience. You got to add a little bit of discipline because you need to get to the consistency so you can add the volume so you can get to your goal. This right here is your mantra. You must be patient and disciplined. You must find consistency in order for you to add your volume so you can get to your goal. If you've noticed, I haven't put numbers here. I didn't say you need to wait one day and be very strong for 7 hours in order to find 17 trades so you can add 10 contracts to get to $7,000. Okay? Because this is your story. Whatever your story is, whatever your part of the process is what you fill in. That's why this is an equation. And we call this the Dex equation. And the Dex equation here has saved my life. Kid you not. I found it was a January. It was very, very bad winter, and I'd gotten sick. I've told this story a dozen times. And I called my brother. At the time, I was trading 50, 60, 70 times a day. I was a nervous wreck. I was in groups and teaching people how to trade, how I'm trading, but also giving them signals. At the same time, I was calling these things out. I was trading the daily signals. I was trading intradays. I was trying to find SR maxes and other systems and 5-minute trading. I was trading so much all over the board. Then my brother called me early in the morning. He goes, "Man, you sound terrible." I was like, "Yeah, I was up all night. I'm sick." I said, "I don't think I'm going to be able to trade today." But we needed money coming into our portfolio. So I said, "You know what? I have the Euro USD." And at the time, this is what my mentality was. I have the Euro USD. And if it pops today, it has a very high rate. If it's sitting over 97%, I'm getting into it. You know, I'm going to put like 10 contracts on. And my brother's like, "Hey, remember, we got to be careful." I was like, "Yeah." At the time, we were only trading 1 or 2 contracts. I was like, "Yeah, whatever, man." I said, I'm just going to put 10 contracts on because I need to get to our quota for the day, and I'm tired, and I can't sit here today. The mentality that started all this was done because I got sick. The mentality that started all this idealism of this equation all started because I didn't need to get there super fast, but I had to spot something. Now, remember, I just didn't go, first when it comes up, I'm just going to throw a bunch of money on. No. I said, I've already noticed that the Euro USD, and it's sitting at 97%, when it pops up, I'm only going to do that one. I'm not going to trade the Great Britain pound, which is in a 96.9 or whatever it was at the time. I could have traded one of the other ones, but I didn't like the Audi that was sitting at like 98%. So I had to be patient. So I waited for the Euro USD. And when it came up, I made sure that I got the proper price. I got in for $30 per contract, and I made my $300. And guess what happened next? I went to bed. My day was done. I got up 8 hours later. It was the first time in a long time I slept for an entire 8 hours. And when I got up, I told my brother what happened, that I'd done this. And he goes, "That's great." He said, "I'm glad you spotted that consistency." And I was like, "Yeah, I just added a bunch of volume to it, man. We got to our goal for the day." And this algorithm was born in this equation. The P plus D is something that we added a little bit later, about a year later, but it made more sense because people said, "How do I find a consistency?" And that's why patience plus discipline equals consistency. Because unless you have this, you can't spot all these other things. All right. Mentality has been shown. By the way, learning to scalp is a very tough balance. Scalping has 2 sides. Money loss, money won. If your money won, if you see, "Oh, I got $14 in there." If you buy in for a contract for $25, you're usually not going to get anything above 70% of this $25 showing in the marketplace at any one time. They're not going to show $25 in the marketplace so you can get out. Are you crazy? No, they're going to try to entice you to get that money to get out. So they'll probably push it to the highest level, which is usually about 70%. Sometimes not even 50%. You should talk to some scalpers that said, "You know what? If this gets to, $12.50, I'm buying out. I'm getting my 50%. I'm getting my money." Yeah, absolutely. Scalper's mentality is great. But when it's one-sided, if you get out for your $12.50 And you just keep doing that. When you lose, you're still losing the full amount of the $75, understand? Which is a reversed risk to reward with Nadex. And never get out due to money on this side. Not, oh, I got to a particular money level. What do you look at when you scalp? Paul, what do you look at when you scalp?
I look at the indicative price. I also check the trend and everything else, just to make sure it is heading in the right direction and I'm not being led on a wild goose chase.
Absolutely. But he looks at market structure. That's what he looks at. Paul doesn't make a decision on the market price. He looks at this price. The market price that's set on Nadex is a configuration and a manipulation by the market makers themselves. Indicative price is Nadex's way of hedging the market, of keeping the market from whiplashing on you too much. That's what they say. I don't know. I'm not trying to cause like conspiracy theory stuff. I just don't like the two different prices, but we have to stay with Forex spot pricing, which is this price here, and not Nadex's indicative price, because I can't pick the algorithm that it does because it's constantly changing. So the solution for us in scalping is to make the decision to scalp only based upon the market itself, but not the market on only just one bar, the market value of this. If you were going to get out of that trade, if you did get into this as a long-term trade, Jason, your depiction of this is that this isn't the bar that would have signified you to get out because it really didn't break any of the market structure. It continued on. It gave you a higher high or higher low, continuing on the actual trend. The only bar, if you would have been in, that I would have been suspect of would have been this one, because it kind of broke here. So this is the bar that I would have really gotten out on. And you would have probably been pressed. You would have lost about 10, 15, 20 bucks, but better than a 75 if you were going to do that. But in my case, the TNT strategy, if you use it correctly, has a very high rate of success. Very high rate. What that is depends on you. Jason's high rate of success may be 80, 90, 70, 80, 90, 95%. When I trade it, I don't even want to tell you what I traded at, because my rates of success are different than yours, only because my concept of success is different. I don't trade on Nadex with the TNT. I can, and I have, but I don't trade the TNT strategy on Nadex. I trade it on Forex. Why? Because when I look at the market, like in this particular one, in this particular area, I would have seen this as a breakout. I wouldn't have seen this as a trend. I would have seen this as a consolidation of the network, right? Because it picked an area and set its high. And when it broke out here, okay, right here, I would have gotten in right around in this area on the Forex market. And where would I have set my stop loss, my area where I don't want to lose any money at? I would have set it right here, maybe even right here. And that would have only been about 10 pips. Okay, so I would have gotten in for 10 pips with this concept. As it progressed, every 10 pips, I would have moved this stop loss up to the next level. Another 10 pips up, another 10 pips up. So as the market continued to go, when it got here, my stop loss would have been here. When it got here, my stop loss would have been here. When it got here, my stop loss would have been here. So it would have never touched. And I would still be in this trade. And I would be up here at 1065 after getting in at 1050. So it would have been about 15 pips in real money. Well, I would have secured already, up to this point, that first 10 pips, and I couldn't fall down below that. So I've already secured my money. As this thing goes on, if it comes back and it grabs it, then I'm in for my 10, 15 pips. Now remember, a pip is just like a single contract. I'm only trading 0.01 if I'm trading at that level for every $1,000 that I have in my account. And if I got $10,000, I'm actually trading a mini lot, which is $1 a pip at this point. So I don't make a lot of money, but I make consistent money. And remember, what am I looking for? It's the same thing in everything. That. I use the TNT strategy also to trade on Forex. And I set my areas of support or my areas of stop loss and take profit at different areas. And I manipulate it. Sometimes I may do a set and forget. I may set, my stop loss here, which is 10 pips. And then I set a take profit up at 10 pips. And if it hits it, I get my money. If I don't, I lose my 10 pips. And that's an R 1-to-1. And that 1-to-1 value only needs 50% success for it to be successful. Actually 51%, but who's counting? Sometimes I may able to get 1-to-2, even 1-to-5. And then my success rates even need to be lower, 35% and even 20%. Can you imagine only being 20% of the time and still making money? Absolutely. Especially if your strategy is involved around money as well. So let me ask you a question. Could you use the TNT to do this? Yes, absolutely. I do every day. The concept of the step bot. Our step bot does a particular process where if it picks the right direction, it uses the TNT strategy, it picks the right direction. Guess what happens when it doesn't pick the right direction? It still uses the TNT strategy to pick the direction, but when it picks the wrong direction, it goes into battle mode. And it says, it looks at market, how far can the market expand to before it has to go back in a certain general next area. And if this is like 400 pips, okay, I can't really do it on this chart. As it starts to go down against us, if we said this was going to be a buy trade, it starts to go down, it starts setting more trades for buy trades, saying, okay, it's about to go. Nope. All right. It's about to go. Nope. No. It's about to go. So then once it does, it's created this engagement with price and balance that once it does start to go from here, this has gone from a 0.01 micro lot to a 0.04 micro lot because it increases the lot value. Excuse me. So once it does, and then it starts to move, this turns that into a majorly winning trade, 4 times the value of what this one is. And then it doesn't need to win all these other trades. It doesn't need to go all the way back up from the original trade to prove right. It just needs to make enough money to do what? Overshadow these other trades. So if this puts on 5 trades in a losing format, what it ends up doing is winning more money than what has on the system for pips. So you could still be minus 13 pips because of all these trades that are on, but the value of money is higher because you've had more lots on. And I'll show you what that looks like on our system over here. Let me clear. I'm going to go over to here and step bot. So this is our step bot. Let me go over to our actual step bot over here. Oh, did they both close? No, they didn't both close. Okay. We were into some pretty big trades. As you can see, this is the equity curve you see on the step bot. If you don't know what the step bot is and you're here right now, you need to get on the phone with me. You need to email me, set up a time, do a consult. The step bot is for everybody. Do you understand me? I don't care if you got money, you don't got money, you're sure what it is, you don't want to trade Forex, you're scared to shit of it. I don't care. It is for everybody. If you're going to want to make money and in a long-term capacity, this is for you. I don't have a lot of time to go through everything, but what I'm going to go through right now will shock you. This process going on since December 5th. Don't look at the dates because this has actually been going on for 2 years now. And we have data for 17 years prior to that we've tested with. So 2 years in this fashion. It hasn't broken it. A couple of times that it has broken, this was a manual issue on daylight savings time, got out of trades prematurely, and one other time as well. But look, all that over that with a very relatively low drawdown. Maybe looking at it as demo, but we have live accounts as well. But this is the what we call the actual. This is the one that runs. Okay. We got into the USD CAD this morning. And as you can see, we started out at 0.02 microlots. And as we called it a sell, but it was doing a buy capacity, we started adding on more. And as it added on more, we finally got to this level. And what did it do? It started to go in our direction. And these first 3 trades were the only ones that gained actual money. This one's more of a break even, but then the other 3 were losses. So you can look at this as like, oh, well, Max, that's less than 50% success. No, it's not. It's actually, if you look at the entire pack, did this entire pack win? This entire trade pack is one trade system. And that means it's one. Do you know how many times, besides this one, let's just say, or even including this one, in all of our data, do you know how many times a trade pack is lost?
Twice, if you include those little.
You include this one, it's 2 times in 17 years worth of data. In the last 2 years, it's lost twice. This one here, and we can say that because of Max. So if we take this one out, it's only lost once. That I can say that wasn't a mistake. That was actually the market. We call that the Black Thursday.
Max,
Mm-hmm.
The video I posted in the chat room, I captured that trade.
Right.
I happened to be looking at it at the right moment, and it's in the chat room. Most people think a perfect trade is, I bought it at such and such, it went up 20 pips, and I sold it. Okay, and the bot does that from time to time. But to me, it's that red arrow by my name. What the bot did, which is so amazing, is it played defense perfectly.
Right.
It missed taking that first trade where we go short and get out in a little bit. It missed it by a couple of ticks.
Yeah.
Yesterday, I think it was.
Yeah.
Today, it played defense. It kept putting on 4 contracts.
Right.
And then as it hit the take profit, it hit it perfectly.
Right.
And it's on that video. It's amazing to watch. It played defense perfectly. And that, to me, is the perfect trade.
You know, if you're watching this after the fact, I'll be playing this at the end of this video. We'll be putting it out. So pay attention to that. I'll have a link also in the description of its standalone video, but we'll be talking about it as well. But actually in the link of this video will be the link to that. But if you're here right now, run over to the room after go to the Dex chat and jump in there. Thank you very much, Thor. I really do appreciate that. I'm just going to quickly jump in and go into Thor. You've been putting on some trades, and do you have anything you want to go over at all?
Not a lot. I've had 2 trades this morning. Both of them kind of went sideways.
Mm-hmm.
One made like 80 cents and one made a few dollars. So
Right.
Nothing real exciting in my life at the moment.
But
just
still
working
pressing
on
forward. It looks like things are still going forward.
Yeah. And I trade kind of both ways, depending on where the price structure is. Whether I do one
Mm-hmm.
at mid price or do several at the floor or ceiling.
Right.
I kind of do both because both work. And mainly it's your account size which dictates, which one you're going to use.
Exactly.
So just trade on.
Yeah, exactly. Great job. I appreciate
I
it.
haven't posted anything today because I was so excited about getting that video up.
I can't wait to go watch. I'm going to go watch it myself right as soon as we're done.
Sorry about the crappy audio, but I've got a cold and it sounds terrible. But
oh yeah, trust me, I know about the cold part. And then we got Paul, who's here. Everything looks like it's going pretty good, Paul, since we've increased the value of the amounts. Looks like you're back into the groove again, right?
Yeah, it's nice to get back into the flow.
Yeah, look at this. This is incredible. See, and here's the thing, right? Any system that's duplicatable by increasing the volume and it can still withstand that volume control, is amazing. See, because look, this is way back in February. He was doing $28 trades, $45 losses, 20. You know, he's scalping. He's doing a whole bunch of things. Actually, not scalping. This was probably an ATM or OTM. But this is the pattern, right? See, losses like $70, $71. There's $28, $29, $30, and $62 wins. And we say, if you add volume, this would have been a $520 win. And, you know, I got some skepticism from people at times, you know, and it was like, no, Max, it can't be that easy. Yes, it is that easy. Why? Because back in March, we said, Paul, start trading with 10 contracts. And so he went boom, 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 boom. Instead of doing incremental crawl, which would have taken a couple of months to get to help his mentality, he jumped straight to 10 contracts. And Murphy's Law jumped in, smacked him right in the head. Lost his first one, right? And then he came back and smacked him again. And then it started getting a little good and smacked him a couple more times. And then the flow started happening. And you can look at the flow here and look at this flow. 280, 660, you know, a couple bad losses in a row can sometimes knock in the noggin, you know, and then it takes some time for you to get back. But once you get back, you really get into the swing of it. And again, now we're into April. If we look so far, and we just grab all of April's, go back in here, right here. I just scroll down. That's a lot of trades, Paul. Come on.
That's about 3 a day, I think. 3 or 4.
3 or 4 a day. That's pretty good. I'm sorry. I should probably just done a one click. So far for April. And seen. Oh my God. $5,595. Paul, that's amazing. And we're only halfway through the month. Excuse me.
Yeah, and that's with the kids off school as well, running around the house.
Yeah, that's with his kids off school running around the house. That was supposed to make me feel better.
Well, it certainly didn't make me feel better when I'm trying to concentrate on stuff. But yeah, you go with the flow. You go with what you know. And I say I've been with you for what, 6 years.
Yeah.
And the initial training. I was talking to someone in the Dex chat. I think someone mentioned it. Where did I get my? Was it Signal? Because obviously I was getting quite a good success. And I had to explain to them that no, it wasn't a Signal. But then I have been doing it for a long time, in such a long period of time, starting with the Trader's Mind, which is the 5-minute one, where you talk scalp, even though you don't like me scalping. Was that after all this time of looking at it, you can. When you have the basics there, which is your news, your trends, and everything else, you can see what's happening and you know where to get in. And these choke ups, which a lot of these are here, are taken from the daily, where I've looked at the daily and seen what I've been taught and gone, well, this is where it is. That's the support and resistance, and you can just see it. You know, I'm not trying to be blasé here, but
no, you are. Well, listen, this is what it comes to. In order for Paul to get the experience he did, he had to do trades. He had to get in there. He had to follow the core system. If you think about following the core up to a point, and then you can augment it by applying your own mentalities to it, but you're still using the core. He's not saying that he's adding, or we're going to go use a MACD rollover strategy and try to overlay. He's still using the same core fundamentals, but what he's done is he's sharpened them. He's able to look at structure, because you'll start to accept this process of seeing structure, seeing support and resistance, seeing the trend redevelop and undevelop, and see what is a breakout and really it's just a fake out, you know, so you get to feel it more than anything. And that's what I told him a long time ago. Doing so many trades, you just begin to feel the process go, because it really just comes down to time and price and the mentality.
There is a very good saying that everybody knows, and that is, if it ain't broke, don't fix it.
That's right. It's something Paul says, Victor says. There's a handful of people that say that. Sarah says that. Ben doesn't really say that, but he makes his money. He's like, if it's not broke, don't fix it. But I'm going to add something. I'm going to times it by 20, and that's what he's doing. But he does the same thing that Paul does. He feels it as well, but he sees it through data and control. All right, I want to thank everybody for being here today. Remember, if you don't have the step bot, get set up. We have a lot of things coming. there's going to be processes that we're going to be adding on. You're going to see a lot more people coming in. These webinars are getting bigger and bigger. Thank you very much for everybody being here. Thank you to Jason and Eduardo and a handful of other people that are in that process. We will be putting this video out here later on today. So if you missed anything or you want to go back and train with it again, we'll have it pieced in. Make sure that you look at Thor's video in here of the USD CAD with the bot. And I hope you're all well, and we'll see you again tomorrow. Today is the 16th of April, and I'm Max Farrell. This is DexFXMarkets.com. We'll see you next time, and as always, trade well.